Welcome guys, in today's video, we will discuss why tech giants are under pressure and what we should do. Over the last 12 months, we have seen a significant upward trend, especially in EV sector, with 1000% increase in share prices of some companies that was largely driven by low interest rates and quantitative easing by Federal Reserves. And while short-term interest rates will continue being low, but eventually after some times it will be started to increase. Interest rates and stock prices are inversely proportional. When one is low, the other one is high. And when interest rates started to increase, we will see a sharp drop in stock prices that maybe eventually led it to a stock market crash. CEO and CIO of ARK Investment Cathie Wood holds a significant position in technological stocks that will be affected most with upcoming market correction. In one of her latest interviews, she talks about market correction, and she also unveiled her strategy for this market correction. Let's take a look at her interview in which she mentioned that she is expecting a market correction, especially in EV sector on which she had her largest bets. Now take a look at her strategy to handle if her stocks comes under pressure.
It seems undeniable to me, though, that you must be thinking about the impact of higher rates on the kinds of stocks that have been tried and true winners for you all throughout, whether it's the Signature Fund, the FinTech Innovation Fund, and even other areas of the ETFs that you have. Are you worried that as rates go up, those stocks could come down?
Well, I do believe if rates were to take a sharp turn up, that we would see a valuation reset, and our portfolios would be prime candidates for that valuation reset, of course. Now, one of the things that I've found interesting over the last really 20 years is that the S&P's PE ratio tends to peak out in the 20 to 25 times range of the forward earnings.
Now take a look at her strategy to handle if her stocks comes under pressure. Please listen carefully as we need to apply same strategy because stocks are now under pressure as she predicted in her previous video.
So my question plays off what Scott just asked you. Do you take into account or do you have any type of forecast in terms of rates and adjust the portfolio to that forecast, or do you keep cash there? And ETFs are kind of interesting in terms of the level of cash you're allowed to keep or not keep. So how do you do it? So rates right now, they're moving up. Do you say, okay, we may be in a little trouble here with this valuation reset. They're going to jump up another whatever up to, maybe 2%. Do you get in front of it or do you just take it as it comes?
No, we use it actually. And so what we've been doing for the last 6 months is expanding the number of names in our portfolio. And we do that as a bull market extends because in some ways it's a tax efficient strategy. What we will do during a correction, especially a severe correction like the crisis presented, we will sell names in which are creating losses now because, again, we've bought them, we've diversified and bought them more recently. Sell those names creating losses to buy our highest conviction names. Some of the names we've been moving into, you'll notice, are names like some of the bigger biotech names, Regeneron, Novartis, Takeda. And what we will do and we think of them as cash-like, but there's also an investment reason we are moving into them. Ironically, we think they're deep value names because these companies, the ones we are choosing, they are able to use the convergence of technologies that is taking place today in the genomic revolution. So DNA sequencing, artificial intelligence, once again, and gene therapies. New technologies, new ways of doing things.
What Cathie Wood said is extremely important for long-term investors, and they should not be scared from any market correction. Instead, they should take this as an investment opportunity to enter in stock market or to cost average their stocks instead of panic selling. So, apply the same Cathie Wood strategy and short only those stocks about which you have low conviction. If you have confidence in your stocks and believe that in long term they will grow, then don't sell those stocks. As I quote Warren Buffett advice in my last video, here again I will repeat. Only buy something that you be perfectly happy to hold if the market shut down for 10 years. I hope you will like this short video. Please don't forget to like and subscribe for timely updates and stock analysis. Making a video takes a lot of time. Need your support to grow, and it will encourage us a lot. Thank you.